Good to see you all, and thank you for attending this session. We are going to take you through the financial and operational performance in our third quarter in our financial year 24. Following a normal agenda, starting with highlights, going into give you more granularity on the operations of the three different business areas before Septima is going to give you more insight into our financials, and we are ending up with summarizing our outlooks for the remainder of the year and the coming periods. And as Rachel said, there is an opportunity at the end to post questions. So let's just dig into the highlights of our third quarter. A quarter that financially normally represents the low point during a normal financial year for Benchmark. Having said this, we have definitely not been standing still, having delivered a quarter with improved earnings from our operations compared to last year, with good progress in genetics, solid performance in advanced nutrition, given that we there have experienced challenging markets. At the same time that we have completed the steps to streamline our health business area and the transition of the Ectosan Vet and CleanTreat business model. In terms of the numbers, you can see it on the screen. Q3 revenues ended at 30.7 million in the quarter, which in constant exchange rate is down by 7% compared to what we delivered in Q3 financial year 23. Behind this top line or revenues, we see that we have been helped in the quarter by growth in revenues in advanced nutrition, while we have seen a reduction in revenues in both genetics and health, and I will comment on that later on to give more granularity on that. While we have seen a reduction in the group top line, we see a strong improvement in earnings from operations reflected in adjusted EBITDA excluding fair value movements, which is the measure that we are using. This has grown by 15% quarter over quarter compared to last year. And we see a different, quite of an opposite movement here compared to what we have seen on the top line. Both genetics and health business areas have delivered significant improvements year over year, but we have seen a reduction in adjusted EBITDA from our advanced nutrition business area. If you look at the group in totality, the main drivers behind the positive development in earnings, again measured in adjusted EBITDA excluding fair value, are a positive development in earnings in Chile. We see a larger contribution from the joint venture we have within genetics in SalMar Genetics. We see a reduction of losses in shrimp genetics, as well as we see an ending of the losses in health that we typically have had in Q3 over the last years. And just to comment the last thing, after the actions we now have taken in the health business area, this should now be a business with positive earnings and cash flow going forward. The improvement we have seen in Q3 on adjusted EBITDA excluding fair value is also reflected in the adjusted EBITDA margin, growing from 12% last year to 15% this year in this quarter. For the year in totality, we stay at 20% adjusted EBITDA margin, similar to what we achieved year to date 1 year ago. The results from the operations in the quarter is also reflected in the development of the adjusted operating profit. We have managed to shrink the loss in the quarter to 0.3 million versus a loss of 1.2 million 1 year ago in the same quarter. In terms of balance sheet, it remains strong, and Septima will come back to that when she is going through the financials. In short, summarizing the quarter, we remain hardworking as a group, and we are trading well in what is a very busy year for us. We have been faced with market headwinds in the nutrition area, which is the biggest business area in the group. At the same time, we have done the restructuring of our health business area, Both of those issues are taking down the short-term performance, but keeping the medium to long-term potential and momentum in the businesses. Moving on, to give more granularity to the performance in the different business areas, and starting as usual with the genetics, where we have landed a quarter with solid performance and good progress in our growth vectors. But it might not be evident if we look at the top line in the genetics area alone. This is down 17% in constant exchange rate compared to last year's Q3 top line for this business area. The reduction in top line is partly explained by the shift we have seen during this year from purely direct sales of salmon eggs. That means sales that we do directly out of our own operations, Salten, Iceland, and Chile, to proportionally more indirect sales through the joint venture we have within genetics in SalMar Genetics. This takes away part of the top line, but not the earnings, not affecting the earnings and the adjusted EBITDA. A few more comments on that shift. The combination between the direct sales of salmon eggs from our own facilities and the indirect sales through the joint venture is also important for the understanding of how our market position is developing. If you look at the Q3 salmon egg sales, and this is the main part of the genetics business, this year compared to last year, we see that total salmon egg sales, direct and indirect, are at the same level as total sales last year. 69 million this year, 70 million last year. And if you look at year to date, we see the same picture. Total sales of salmon eggs this year are, that's indirect and direct, are 258 million, while we was at 275 million year to date last year. But it should be understood that the numbers we saw last year was in a year when we also had the extraordinary effect of the supply constraint of our main competitor in the market. So if we correct for the bumper effect, and that's around 30 million eggs that came from that last year, we have therefore continued to experience growth in the underlying salmon egg sales also this year. Beyond the effects on top line in genetics caused by the direct and indirect salmon egg sales, we have also seen a shift in the timing of the harvest income compared to last year. This was affecting our top line positively in Q2, but it has had a negative effect in the numbers that you see for Q3 in this year. Looking at our earnings, our adjusted EBITDA excluding fair value, we see a significant improvement compared to the third quarter last year. In nominal value, we have gone from 2.3 million to 3.3 million in the quarter, bringing our adjusted EBITDA margin up to 28% versus 16% in the third quarter last year. Behind this significant improvement, we have several factors playing positively for us in the quarter. The main elements are significantly improved contribution from our salmon genetics activities in Chile. Second one is significant reduction in cost and loss in our shrimp genetics activity, as well as larger contribution from our joint venture SalMar Genetics. All of this comes as a result of our focus to improve our results, taking actions to make the growth vectors become positive contributors to the group. The financial figures for the quarter also impacts the figures for year to date and Q3. Adjusted EBITDA excluding fair value is up by 13% compared to year to date last year, and our adjusted EBITDA margin excluding fair value is up to 24% versus 18% year to date last year. Moving on to talk a little bit about the strategy. And also this time I would like to remind you that a key element in our strategy in our core genetics business is to move towards differentiation of our products, building in traits and new technologies to make sure that we can differentiate, justifying higher value in the genetics than we see today. As I have pointed out in previous presentations, a huge value creation potential sits within this over the coming years. This is also why we've had a very deliberate strategy to strengthen our efforts to take out this potential. As a first step on the way, we have launched new lines of salmon genetics into the market this year. These lines are more tailored on specific traits important for the customers. And even if they don't hold the newest technologies that we are about to develop, they represent steps on the way to introduce further specialized value creative genetics into the market. We are also advancing in our systematic effort on the more transformative genetics mentioned in previous quarterly presentations. Both in terms of diploid sterility and gene editing, we are following our plans to enable us to bring forward products with these technologies in the future. I should also mention that we also have significantly advanced our program to launch product addressing complex gill health disease, which is a key challenge in many salmon production regions, Scotland being one of them, Norway also. Our plan remains to introduce these products into the salmon industry during financial year 25. Finally, just to mention also on the same topic, our participation in the CRISP Resist project. This is something that we have been engaged in for quite a while, together with the leading salmon companies as well as leading international R&D institutions. We have for several years been looking at how gene editing could be applied to combat sea lice. And we are looking at and researching the resistance to sea lice that we see in coho salmon. Yet another example of how we most likely will see genetics applied in the future as a main tool to drive the industry's sustainability, to help the industry solve some of the main challenges it has. Then, moving over to the financial overview of the different parts of our genetics business, and this is the way we have been presenting them in previous quarters. The financial figures you see on this slide for our core genetics business, which is our operations out of Norway and Iceland, is reflecting the shift in sale of eggs that we have had in the quarter, as discussed earlier. But also, it has been impacted by the shift in harvest income that I've already mentioned. You can also see the mentioned progress that we've had in Chile, where we continue to build a sustainable, profitable operation. This is the second quarter in a row with positive adjusted EBITDA for our Chilean genetics operations. We also continue to see the effect of the restructuring and right-sizing of our shrimp genetics business, reducing the loss and the gap towards profitability for this part of the genetics business. In the numbers, we do not see fully the effect of other strategic shifts that we have done within this business, this part of the business yet. We are working on expanding our business model, and that has good progress. And we truly believe this will be seen in the periods to come and the years ahead. Finally, on genetic services, which is also sketched out here, we have carved that out as a separate column, as this is an area where we are focusing on growing, and we expect to generate more substantial numbers in the years to come. This is a profitable business where we have invested and have started offering very competitive genotyping services to our clients around the world. The positive financial effect of this is coming through with doubling of the top line in Q3. But what you can also see is that we have increased cost. That's due to the increased resources added to this business to enable execution and acceleration of the added new services. And going forward, these resources will drive increased top line, but also increased margin and earnings to an even bigger extent than we have seen in the numbers so far. That was what I planned to say on genetics. So let's move over to our biggest business area, advanced nutrition, or INVE, which is the well-known brand name of this business area in the market. Here we continue to have a solid performance in what is still a soft market, and we keep well positioned for when the market again turns. Market-wise, we have been through a tough period for more than a year now in this business area, and the soft market conditions, in particular in the shrimp market, are continuing. But despite this, we have been able to uphold our performance pretty well. Top line in Q3 is up 11% in constant exchange rate compared to the third quarter in financial year 23, illustrating that we have kept the momentum in the business in the last months. Again, given the market conditions that we have been working in and are working in right now, we know that this is a strong performance, and those players who are in the same markets will surely recognize this. In terms of adjusted EBITDA for the quarter, we see a drop compared to Q3 last year. That is explained by changes in product mix in general, but also more specifically within the live feed portfolio, the Artemia portfolio. In this quarter, or in this where we are right now, we have a bigger influx of lower grade Artemia from the financial year 22 and financial year 23 harvest season that temporarily commands lower margins for us. Looking ahead, this will even out and normalize again, because while we in 22 and 23, for the 22 and 23 season, we were low in terms of quality and quantity. The financial year 24 season was high both in terms of quality and quantity. So we will take this back when we're coming into the future quarters and into next year. Another issue impacting our margin in the quarter that should be mentioned is reminding us that we are truly running a global business, is the increased transport cost that has been hitting us. This is due to increased container flights, reflecting vessels now avoiding the regional insecurity of the Suez Channel and instead go around Cape of Good Hope on their journey between continents. This has increasingly led to higher freight costs as we have moved through the year. Looking at year to date, adjusted for Forex headwinds and applying constant exchange rate, the top line is actually slightly ahead of what we experienced 1 year ago. This, despite the fact that we, in the first months of last year, experienced good trading conditions in the market, while we, throughout the whole financial year we are in now, have had significant market headwinds in this business area. On adjusted EBITDA, we are behind last year so far for the reasons explained earlier, mainly product portfolio mix and increased logistics costs, both expected to be temporary. A few more words on market conditions. The shrimp markets, which is the main markets for the advanced nutrition business, have so far remained soft with low demand. And the green shots we mentioned last time or in last presentation, and that we are still continuing to see, have not yet translated into a real market recovery. The fundamentals behind the situation in the shrimp market remains the same. Macroeconomic factors have depressed the demand in the end markets. This has also not been helped by the fact that the retailers, which has benefited from price drops from the producers, have not forwarded that to the customers. That has continued to depress the demand in the end markets, which has trickled down the supply chain and implies less production, less stocking, which again implies less demand for our products. Based on the latest market reports, there are no signs of change in these dynamics. In the two main markets, US and the EU, we see consumer confidence is on the rise, and the retailers have now started to finally reflect lower prices from producers onto their customers. This will help demand in the end market. The remaining question is the third big, I would say, market, which is China, that is still not out of the depression that has led to less consumer confidence in that significant market. We know that the market cycle will turn, but it's still difficult to predict when. But with the current organization and the momentum we have in our advanced nutrition business, we are sure that we are well positioned to take advantage of the upturn when that comes. A positive development, and I also mentioned that in my last quarterly presentation, a positive element of the markets being what they are is that the farmers stick to what they know and to the relations that are well established. We are quite proud of this. This is something that we see that we are benefiting from, being a very well-respected player with well-known brands in the market. And it's probably also partly explaining why we are doing so well despite the challenging market conditions. It should also be mentioned that we continue with our effort to develop product portfolio to make sure technologies are added that strengthens our position as a provider of specialized products and solutions, commanding high margins. A clear example of this is that our sale of Artemia with technologies added has grown from 40% to 60% over the last years, bringing the business away from being a commodity business. We used to sell more commodities before, towards a highly specialized business, commanding entry barriers to competitors, as well as high margin. And finally, just a few comments that there are also positive developments supporting the recovery of the industry, coming from the regulatory side. And one of the examples of that is, for instance, in India, which is a very important production region for shrimp. They have reduced import duties on aquaculture supplies, which again better the conditions and competitive positions for the producers, which eventually also will help growing the industry and growing the production, which is important for us in that important market. Likewise, we see governmental support of developing further value of the production in Ecuador, another very big market, to drive further demand. Again, another example of initiatives that will help the industry going forward. Finally, over to health, the health business area, the area where we have taken decisive actions to migrate the business model to become less capital intensive and right-sized, both in terms of infrastructure and organization. The financial figures also reflect this, both in terms of top line as well as adjusted EBITDA for the quarter. We are significantly down on top line, but due to the significant reduction of financial burden and exposure, we have taken out 2 PSVs and significantly been slimming the organization. We have delivered a break-even quarter on adjusted EBITDA, as opposed to the negative numbers that we have shown from this business area in previous third quarters. Where we are right now, also with actions that partly has been taken after the end of the third quarter, we have an agile health organization covering what is needed to run an effective and profitable business based on our products from Salmosan and Purisan. At the same time, we have retained key resources and competencies to continue to offer the new solution, Ectosan Vet and CleanTreat, but that will be subject to customers' willingness to invest, take the exposure of running the CleanTreat systems on alternative platforms. They can do that either through a barge solution that I mentioned before, but also an integrated solution on future well boats. And both solutions we have prepared and are able to support, even if we have taken down our own exposure. As I've said in earlier presentations regarding Ectosan Vet and CleanTreat. What we have done over the last 2 years, we have proven the concept with a highly efficacious sea lice medicine, Ectosan Vet, combined with the transformative purification system CleanTreat, which offers the farmers a very environmental friendly way of treating sea lice, at the same time as it's a very gentle way of treating fish, both from a fish health as well as a fish welfare perspective. The interest for the solution is definitely still in the industry. And if you look at the sea lice numbers and the sea lice pressure that we again are experiencing in Norway, that is not a surprise. We are in dialogue with farmers on the solution, but timing for when the solution becomes available will be dependent on the investment decisions of the farmers. Meanwhile, we keep and have the capabilities, but with a very low financial exposure to the solution. Finally, at the end of my part of the presentation, a few words on Salmosan and Purisan, which keeps on getting new life as a very efficacious solution on sea lice, and remains now as one of very few medicinal tools that the industry has available. Our belief in Salmosan Purisan has grown over the last 2 years and continues to do so, and we also see new regions coming in with an obvious need for the solution in the years to come. We expect the sale of this medicine will continue to develop normally over the periods to come, which will make our health business area a cash-generative business going forward. So, with these words on giving you more granularity on the business areas, I'll leave it now up to Septima to go through the financial in more detail. So over to you, Septima.
Thank you, Trond. So, as Trond noted, operationally, we as management have been focusing on navigating our way through difficult markets in nutrition, working to restructure the health business and deliver a solid performance in genetics, with the overall objective to strengthen all of our business areas and reach profitability. As you can see, we've both the quarterly and the year-to-date figures here, but I'm going to speak mainly to the quarterly to give you an update as to how we've progressed during this period. At a revenue level, we were behind last year by 7% at constant exchange rate. And as Trond noted, we're in a mixed trading landscape. In nutrition, we had revenue growth of 11%, driven in the main by sales of lower grade Artemia inventory, which had an additional positive, which as it enabled us to release this cash from a working capital perspective. In genetics, we were behind by 17%, driven of course by the timing of the harvest income and the shift of egg sales from direct sales to indirect sales to SalMar through the SalMar joint venture. And then health. Health was 41% behind last year, given that we commenced the decommissioning of the second PSV in this quarter and overall had a limited amount of Ectosan and CleanTreat revenue. Overall, this resulted in lower revenue for the period. Looking at gross profit, including fair value uplift, this fell to 15.6 million, in part because of FX headwinds. But as I noted previously, whilst the nutrition grew sales, the product mix negatively impacted gross profit by £1.1 million. In addition, higher freight costs of £0.4 million due to the altered logistics routes Trond discussed resulted in overall reduced gross profit of £1.5 million in totality for nutrition. For genetics, whilst we had reduced sales, when we look at the gross profit, excluding the fair value in comparison to the same quarter last year, we actually grew by £0.5 million. This was driven by a better result in Chile salmon, which continues to turn the corner towards sustainable profitability, and a shrinking of the loss from shrimp after we restructured it earlier this year. The fair value uplift in genetics this quarter was a negative of £0.1 million versus a positive of £1.4 million in the same quarter last year. And then from a health perspective, gross profit actually grew by £0.6 million due to the decommissioning of the PSVs and taking the costs out to reflect this change in business model. Then moving to look at R&D. This was flat versus last year as we continue to invest in innovation, as discussed by Trond, but we've also internalized some of the R&D spend to get better cost efficiencies from it. Operating costs are down to £9.9 million. This is due to genetics, health and corporate holding back on spend and maintaining good cost control, offset by slightly higher nutrition costs in the period. Looking at adjusted EBITDA by business area for the quarter. Genetics delivered growth excluding the fair value uplift of £1.2 million. Nutrition, with difficult markets, was £1.5 million behind the same quarter last year. And the changes we've made in health have resulted in growth versus last year of £0.8 million. All the above drove adjusted EBITDA excluding the non-cash fair value uplift to grow by 19% at a constant exchange rate. An adjusted EBITDA margin of 15% excluding the fair value uplift. Now looking slightly further down the income statement. During the period, we incurred exceptional costs of £2.6 million, mainly related to spend associated with the formal sales process, which is currently underway. In addition, we also recognised costs related to the biomass write-off associated with the ISA incident, which occurred earlier this year, of £0.6 million. Net finance costs is driven mainly by the debt and lease interests, and FX gains and losses in the period netted each other off, so that was an excellent result. When compared to the same quarter last year, the difference relates to movement on hedges in the prior year, which were not material in this year. The lower EBITDA, compounded by higher exceptional and finance costs, drove the loss before tax to £9.4 million in the quarter. So then moving on to the next slide to look at cash flow for the quarter. Quarter 3 is traditionally a lower cash generative quarter with cash generated from operations of £1.2 million. CapEx in the quarter was low at 0.8 as we continued to preserve cash to maintain a strong balance sheet. And then, of course, during the quarter, we paid £4.5 million in interest and taxes, £2.4 million to service our debt, with the balance being paid in taxes. The taxes relate mainly to Norway, Iceland and Belgium, our main tax-paying countries. During the quarter, we had an outflow of £1.8 million associated with the leases. This is compared to £2.7 million for the same quarter last year. So you can start to see the impact of taking out the PSVs. But we're going to see the full cash impact of this coming through in financial year 25. And finally, a negative effect from foreign exchange of 1.2, all contributed to a net debt figure of 75.1 million at the end of the period. Moving on to the next slide, just to look at the cash flow from a year-to-date perspective. As I noted previously, cash generated from operations was impacted by increased investment in working capital in the year. This is impacted by lower trading in nutrition alongside higher payments under our take-or-pay contract for Artemia during the year. Lower capex of 2.7 million was a continuation of the trend that you would have seen in quarter 2. And of course, we had the cash outflow of 12.4 million for interest and taxes. This all resulted in our current net debt position. But with cash of 22.8 million and available liquidity of 37.1 million at the 20th of August, we have a strong balance sheet as we continue to progress the business and move it forward. Back to you, Trond.
Thank you, Septima. Let's move over to the outlooks for the rest of the years and the periods going forward. As I said in the highlights, we remain a very hard-working group and we are trading well in what is a very busy year for us. We have been faced in this year with market headwinds, significant market headwinds in the nutrition area. At the same time that we have done the restructuring of our health business area, both taking down the short-term performance, but keeping and ensuring the medium to long-term potential in the businesses. The development of our business is never a straight line, but we are confident that the actions taken during this quarter and during this particular year will bring all business areas forward on the right path to develop value creation for our shareholders in the medium to long term. To be a little bit more granular on the outlooks for each of the business areas. In genetics, we keep, as we always do, good visibility on salmon egg deliveries for the full year. That's both direct and indirect deliveries. A year where we do not benefit from the extraordinary uplift in the market conditions that we saw back in last year, back in financial year 23, as well as having seen a shift in sale of salmon eggs sales from direct to indirect sales. The fundamentals in the operations in our core salmon genetics business goes well. On the other hand, in our lumpfish activity in Iceland, which is a part of the genetics business, but it's a secondary income stream, we do not see the same demand as in previous years. And this will likely cause that we end the year just shy of what we achieved last year for the business area. Given the bumper effect that we had in our financial year 23 numbers, last year's numbers, we see this as a good outcome. We keep on our work, of course, to develop our growth vectors in Chile, shrimp genetics and genetic services, with a clear aim to make them more profitable, more contributing in the time to come. In advanced nutrition, we still expect to continue to work hard in what is still a soft market. We do not bet on the market suddenly turning. Rather, our thinking is that we are focusing on making the utmost of the market as it is. That is a recipe that has shown very effective over the last year. Then we are very sure that we are very strongly positioned when the market again turns, even if we do not expect this to happen in the current financial year. The fundamentals in operations and positioning of the advanced nutrition business area is very strong and will pave the way for strong value generation in this business area in the years to come. In health, we have now taken the steps to streamline the business area to become a cash-generative business based on the sales of Salmosan and Purisan, but still offering the capability to customers who invest in Ectosan Vet and CleanTreat. We are in dialogue with customers on solutions for this, but timeline for when the solution again will be operational is subject to the investment decisions to be taken by the customers. Looking at the sea lice numbers right now in Norway and how they are developing, the fundamentals behind such decisions should definitely be there. And with these words, we end our presentation, and then we are open for Q&A.
So if we start on genetics, do you see the margin improvement in genetics as being maintained, continuing for the rest of the year?
Septima, I think you can probably be precise in answering that question.
Yes, generally speaking, in genetics, we don't look at the margin on a quarter-by-quarter basis. We look at it more on a 12-month basis because of the cyclicality of the salmon egg business. So we do have ebbs and flows, but overall, we're happy that we've got a strong margin in our genetics business, and we'll be able to continue to progress it, not just in the next quarter, but more importantly, into the future.
Thank you. And staying in genetics, how does the joint venture with SalMar contribute to prospects within that division?
Well, I can start on answering that, and you probably can support me a little bit, Septima. Well, first of all, there are several elements around that. First of all, SalMar is a very significant customer within the salmon area, so that joint ventures secures a very, very strong relationship to that big player, and which has a very, very significant volume of genetics. So that's part of it. As we are seeing now, sales through that joint venture takes down our top line, but it doesn't really impact to the same extent on our adjusted EBITDA. What it does is that it also frees up capacity from our other facilities in Iceland and Norway to sell more eggs to other customers from our own facilities. So how we see this over time is that, by having that joint venture, that will enable us to have very strong relationships to SalMar, but we can also sell to other customers from that joint venture. So that gives us, without any significant investment or any investment, it gives us a lot of opportunity to expand there. At the same time as we will have possibility to expand the sales of salmon eggs from our existing direct or our own facilities without doing significant investment in new infrastructure. So what we are aiming at is to fill the capacities in our own facilities, but also to expand what we are taking out of the joint venture with SalMar Genetics.
If I can just add, from a practical point of view, our share of that profit that comes through from that joint venture is a component part of our adjusted EBITDA metric. So it actually it is an important part of our business, not just to Trond's point, but it also is a contributing profitable part of the business.
Thank you. If we move on to advanced nutrition, we've got a couple of questions around that. Do you see the current soft market conditions as being temporary?
Well, we see them as temporary, but as stated very clearly, we don't know for sure when the market is turning. But for sure, it's a temporary situation. If you look longer term over how the shrimp market has been developing, we have had significant growth, and we continue that to continue in the years to come. But we are right now, due to the factors that I've been mentioning in my presentation, in a situation where we have headwind in the market. When that turns, we cannot say. The only thing we can say is that we know for sure that we are extremely well positioned when that turn is happening, and that we will benefit from that when the market again is normalizing.
Right, thank you. And would you highlight the potential in any particular new market within advanced nutrition?
Well, we have always been talking a lot about the shrimp market, which is the biggest and most significant part of the market for our advanced nutrition business. We don't talk too much about the marine fish market, which we are also very, very well positioned in and very present in. That's composed of, in broad, it's composed of two things. We have a well-established or well-developed market in the sea bass, sea bream industry in the Mediterranean, but we also have a lot of marine fish activities, especially in Asia, that is still in an early stage. Going forward, we are sure that the potential of that market is significantly bigger than what we see today. We are well positioned to take a position in that market. So as that will grow, that will be a significant growth vector within the advanced nutrition business. So if I'm going to highlight something, don't forget the marine fish market, especially in Asia. That will be a significant part of the growth going forward.
Thank you. We've got a couple of broader questions. Although I know not directly affected, have there been any ongoing consequences of the facility business in Iceland following the volcanic eruptions in recent years?
And the quick and the good answer on that is no. We are not too far away from where it happens, but we happen to have all our facilities in Iceland, and I think we have at least 3 on that part in Iceland, is positioned on a safe place in terms of volcanic activity. It's on a plate that is very stable. So we haven't had any consequences so far, and we don't expect any consequences going forward. The only risk has been related to energy supply, water supply, that could be affected, but we have, of course, have mitigations in place and contingency in place in order to make sure that if that happens, a short break in the energy, that we have means to mitigate that for our operations. So I would say the risk related to this is very, very low.
Thank you. And just on the health division, is that restructuring process complete now?
Yeah, I would say yes. Where we are now, we have an agile organization that is sized to be very efficient in driving Salmosan and Purisan business and become positive in terms of earnings and cash flow going forward. And we are positioned, but also to take the opportunity in Ectosan Vet and CleanTreat, but we don't have any financial exposure to that as we have had historically. So I would say that we have positioned where we have been aiming at positioning that business going forward to become a real business with earnings and that is cash positive going forward.
Thank you. And we have a question. Has the listing on the Oslo Stock Exchange had any beneficial effects yet?
I would say barely, to be honest, but we are where we are.
Okay, and we've also had some questions on the strategic review, but you really can't say anything on that.
No, we are
Perhaps
not commenting on that, and we
Yes.
will update the market in due time on that process.
Great, thank you very much. Well, that concludes the Q&A session, and it's just left for me to thank everybody for attending the webinar this morning. We will send round an email in due course asking for some feedback, and that's really helpful for management to see. So we would welcome any comments. And the next schedule update will be your full year results in November later this year. So we look forward to hearing from you then. And thank you very much for your time today. Much appreciated.
Yeah,
Thank you,
thank you.
Rachel.
Thank you all.
Thank you.